Welcome to Dr. Fred Markets. This is not financial advice. While most people ignore what's happening in the markets, a few choose to pay attention. And that difference, that simple choice to stay informed, changes everything. You're one of them. Let's get into it.
AI is pumping your index fund while cannibalizing your future. Verdict: U.S. stocks are now an AI derivatives casino dressed up as long-term investing, and you are the liquidity. S&P 500 today, 78.66, up 0.99%. Cute little green day, until you remember this index is now a thin tech and AI skyscraper built on a crumbling diversified foundation. You're not buying the American economy anymore. You're buying an AI Narrative ETF with extra steps. Look at the scoreboard. Nvidia 199.57, down 4.63% on the day. The GPU warlord bleeds almost 5%, and the S&P still finishes up. Translation: the market just told you something critical. AI is no longer a single stock story. It has infected the whole bloodstream, because while Nvidia limps, the AI clients are throwing a party. Alphabet, $384.80, up a sick 96%. That's not a move, that's a detonation. One day, almost 10%, on the back of one brutal sentence in the earnings tables. Google Cloud and AI customers are finally paying real money. Bloomberg says it flat. Alphabet sales crush estimates, powered by cloud and AI demand. This is the market screaming, we no longer care if AI is a science project, show us the invoice. And Google did, so the stock rips. Same tape with Amazon. AMZN $265.06, up 0.77%. Not a face melter like Alphabet, but the story is identical. Reuters reports Amazon tops cloud expectations because AI demand is ripping through AWS like a tornado in a trailer park. This is real revenue, not AI fairy tales from 2023. Notice the pattern? The AI picks and shovels, darling. Nvidia bleeds. The AI toll booths, Google Cloud and AWS, cash checks. Everyone thought the AI trade was just chips. Today, the market rewrote the script. The real racket is cloud landlords charging rent on AI workloads. Now plug in the power behind the casino. Jerome Powell. Axios drops the bomb. Powell stays as Fed governor. Trump doesn't get the vacancy he wanted. Translation: the same guy who inflated and then popped your last bubble still holds the interest rate nuclear codes. Forget the campaign noise. Markets care about one thing. Do we still have the same dealer at the monetary roulette table? Answer: yes. Powell remains. Rate policy stays on the same general track. That means the AI mania in US stocks keeps operating under the same oxygen level. Tight but predictable. And while financial Twitter screams about soft landings, a United flight out of SFO just reported a possible drone strike at 3,000 feet. Why does that matter to US stocks and AI? Because every time a drone hits the news, defense, surveillance, and autonomy budgets quietly grow. And who powers autonomy, targeting, logistics, threat detection? AI. That's the filthier side of the AI boom. Every geopolitical scare is a stealth tailwind for US AI infrastructure, chips, cloud, software, the same stuff that is now half of what drives your S&P performance. But let's talk about the apex predator in this loop, Satya Nadella. The TechCrunch line is scorched earth. He's ready to exploit the new OpenAI deal. Exploit, not leverage synergies, not foster innovation. Exploit. That's CEO for, I found a legal cheat code to weaponize AI inside the US stock market machine. Microsoft gets the brains of OpenAI, the muscle of Azure, and the distribution of Office and Windows. That stack is a monopoly speedrun. They're wiring generative AI into everything from PowerPoint to your Outlook inbox, and every one of those endpoints is a mini toll booth. So stitch this together. Signal 1, the index. The S&P 500 prints fresh strength at 718.66, up nearly 1%.
Does what you just heard shift something for you? That feeling, that need to know more, is exactly the right reaction. Most people never get there. You just did. Let's keep going.
Despite Nvidia getting punched in the face. That means the AI story has spread across enough big names that a single titan bleeding no longer crashes the tape. Signal 2, the Cloud Kings. Alphabet rips almost 10%. Amazon edges higher on strong AI cloud demand. Wall Street now rewards applied AI revenue, not slide decks and cute demo videos. Signal 3, the power structure. Powell stays. Monetary policy continuity. Nadella plots to exploit the OpenAI deal. The referees and the mob bosses of the AI stock game remain exactly who they were. Cliffhanger: if the real AI winners are now the mega cap platforms and your diversified S&P is just a basket of those platforms, how long before US stock market returns are basically just a disguised bet on a handful of AI oligarchs? Here's the connection nobody wants to state out loud. US stock markets are no longer a broad bet on American productivity. They are a levered expression of AI platform power, funneled through a shrinking handful of mega caps glued to your index fund. The S&P goes up, you think the economy is strong. In reality, Google sells more AI cloud time, Amazon rents more GPU hours, Microsoft sucks OpenAI juice into every enterprise contract, and those three drag your retirement higher while the rest of the index quietly rots. Nvidia dropping while the index still pops is your tell. The market has evolved from buy the chip dealer to buy the AI landlords. Chips are a cost. Cloud plus AI subscriptions are recurring tolls. Wall Street always ends up backing the toll booth, not the hardware. Powell staying in the chair cements this. The Fed won't rescue unprofitable AI dreamers, but it will keep the environment stable enough for mega-cap balance sheets and buybacks to dominate your index. Rate volatility is muted, which means the cost of capital punishes small AI players and crowns the giants. Nadella's word choice, exploit, is the whole ballgame. He knows regulators move slow. He knows OpenAI needs his money. He knows enterprises are addicted to Microsoft. He's merging all three into one profit pipeline, and the US stock market is the scoreboard. So what does this mean for you? If you own the market through an S&P ETF, you are now heavily exposed to an AI oligopoly and whatever regulators decide to do about it in the next decade. You're not neutral. You're making a directional bet on a tiny group of AI landlords. This is not financial advice, but here is the truth. 1. The S&P 500 is now an AI platform index. Its fate tracks the revenue of a few cloud and AI killers, not 500 evenly relevant companies. 2. The real AI money today flows to the toll booths, Alphabet, Amazon, Microsoft, not just the chip foundries. The market shifted from hardware hype to recurring AI rent. 3. Powell's continuity and Nadella's aggression lock in the current power map. The Fed stabilizes the stage, mega-cap AI platforms perform the show, and your index fund is forced to buy more tickets every quarter. If that terrifies you, good. You're finally awake. Now go audit your exposure. How much of your diversified US stock allocation is actually just an AI tax farm run by 5 companies? Do the homework, read the weightings, read the earnings, and stop lying to yourself about owning the broad market. This is not financial advice, but if you ignore how AI has hijacked US stock markets, don't act surprised when your portfolio's fate gets decided in a single earnings call out of Seattle or Mountain View. AI is pumping your index fund while cannibalizing your future. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.